This session, I would be sharing with you the findings of Islamic Finance Country Index 2020. And without going into a lot of background details, I would like to first highlight just five things about on which Global Islamic Finance Report focuses. The first highlight, and I think it's a very important one, is that by the end of 2019, the global Islamic financial services industry reached the size of 2.733 trillion US dollars. And this represents an annual growth of 5.5%, which is significantly lower than what we used to present about 10 years ago. The annual growth in the Islamic finance services industry for the last 11 years since the start of GIFR is still 11.7%, a figure which is quite respectable. However, given that on an annual basis there is a consistent decrease in the growth rate, this should pose a challenge to the policymakers and other stakeholders in the global Islamic financial services industry. Islamic finance or Islamic banking and finance remains a banking phenomenon by and large, given that 74% of Islamic financial assets are held by the banking institutions, full-fledged Islamic banks, as well as conventional banks offering Islamic banking services through Islamic windows. Encouragingly, there is an increase in the share of sukuk in the global Islamic financial AUM. It's about 17% as of now. Last year, or the year 2018, at the end of 2018, this share was 15%. So there is a visible improvement of sukuk in capturing the share in the global Islamic financial AUM. So with this brief on the 5 points highlighted in GIFR, I would like to go to Islamic Finance Country Index, given that I have only about 6 or 7 minutes left. As Dr. Rizwan Malik mentioned, Islamic Finance Country Index started in 2011. It covers 48 countries only. And we have deliberately kept the number to 48 because our research suggested that the activities which come under Islamic banking and finance in other countries of the world remain at best marginal with respect to the global Islamic financial assets. And as I mentioned, the global Islamic financial assets are as of now 2.733 trillion US dollars. Again, briefly mentioned by Dr. Malik, it's based on a multivariate analysis. And this was first such an attempt in 2011 when we pioneered IFSI. Since then, we have seen an emphasis on multivariate analysis in other indices which have come out in the market following the success of IFSI. There are 8 factors that determine the leadership and potential of different countries with respect to Islamic banking and finance. We have come up with 2 major adjustments to the index since the start, and this has affected the rankings of the countries in some way. The details of which can be found actually in the last year's IFSI when we reported our second adjustment. The factors that determine IFSI, they are shown in this figure. Size undoubtedly remains the most important factor determining IFSI, with 62.5% of explanatory power in the index. Size itself is a composite factor which comprises number of Islamic banks in a country, number of Islamic banks and other financial institutions in a country, and the amount of sukuk outstanding therein. Sharia governance is another important factor that explains a 19.7% variation in the index. Muslim population, education and culture, regulation and law are other three important factors with respective weights of 7.2, 5.7, and 4.9% respectively. With this, we come to the rankings of 2020. As we don't have time to cover all the 48 countries, I have restricted myself to the top 10 and the bottom 10 countries to exemplify the coverage of IFSI and some of the points which I would be mentioning in a minute. The top 10 countries are Malaysia, Indonesia, Iran, Saudi Arabia, Sudan, Pakistan, Brunei Darussalam, United Arab Emirates, Bangladesh, and Kuwait. Malaysia this year has taken over from Indonesia, that was ranked number 1 in the 2019 IFSI rankings. Malaysia has featured in Islamic Finance Country Index significantly since we started the index in 2011. When it comes to the bottom 10 countries, we have the likes of the Russian Federation on the 39th position, followed by Syria, Germany, the Philippines, Ghana, Mauritius, China, France, Gambia, and Spain. When we look at the score, if you can see my cursor, and we find that these 10 countries have IFSI score of 1.45 out of 100 or below. So this shows that the countries which are down in their rankings, they are not contributing significantly to the global Islamic financial services industry. And this is one of the reasons that we have restricted our sample size to 48. Although there are some other indices which have a lot more coverage, but we believe that the sample size of about 50 is robust enough to capture the state of affairs of global Islamic financial services industry. I would like to highlight at least one interesting story which has emerged with respect to Islamic Finance Country Index. There are quite a number of other stories, but as I said, we don't have time for this one. I would like to highlight this comparison between Bangladesh and Bahrain. When we started IFSI in 2011, Bangladesh was only a marginal Islamic finance market at that time, and I would come to the definition of marginal Islamic finance market in a minute. Bahrain at that time was also a significant market, and it still remains significant over the number of years. While Bangladesh has improved significantly, it has now an IFSI score of over 50, and it has become an exceptional Islamic finance market. Bahrain has seen the growth in the Islamic financial services industry with some kind of consistency. As I mentioned in the beginning, that the size plays a very important role in the construction of IFSI. So the countries which have larger Muslim population, they have benefited from this index as compared to the countries like Bahrain, which have very small Muslim population. The classification which we have come up with, and the details of this could be found in our last year's report, 2019. We haven't included these in 2020 report because we didn't want to repeat. Insignificant Islamic finance markets are those for which IFSI is 10 or less in terms of score. Marginal Islamic finance markets are the countries for which IFSI has got a score of 10 to 20. Moderate, 20 to 30. Significant, 30 to 40. And exceptional Islamic finance markets are the ones which have IFSI score of more than 40. And there are 10 such markets in the world. The top 10, they are actually exceptional Islamic finance markets. There are three significant Islamic finance markets, three moderate, two marginal, and 30 remain insignificant. Another reason for us to focus only on the 48 countries and not go beyond that. There are three gainers in this year's report. Senegal is the first one, which has jumped 20 places from 47 to become the 47th most important Islamic finance market. Nigeria has jumped 5 places to become the 21st most important Islamic finance market in the world. And Pakistan has jumped up 4 places to become the 6th most important Islamic finance market in the world. With this one, I would like to stop here. But ladies and gentlemen, for further details, please consult your complimentary copy of Global Islamic Finance Report 2020-21, which would be emailed to you after this event. Thank you very much.